The secret of success is to do the common things uncommonly well. John D. Rockefeller. And my friends, the common things that we strive to do uncommonly well is chart these markets. Use the historical price movement to help us forecast and see what's coming based upon prior trends, particularly weekly vertical crossovers. We're here for you every day. We ask you to spend 10 to 15 minutes with us charting these markets, filling out your weekly market worksheet on Fridays. The other 4 days of the week, you're filling out the daily market worksheet. And whenever you do a practice trade, you fill out the trade worksheet. How do you fill those worksheets out? Where are they? If you're a subscriber, they're for free in your show notes every day. And at the end of today's video, I'm going to put all 3 of those trainings on how to use all 3 of those worksheets. I do appreciate all of the support from our Patreon supporters. We sent you those 20 weekly vertical crossovers on the S&P 500 last night. Hope that you spent a little bit of time going through those, qualifying maybe 2 or 3 for you to practice trade, maybe for you to fractionally trade. What is fractional trading? Well, that's the training in the show notes today. Check it out. It's the next step after paper trading. A little hint. Fractional trading is where you use a small dollar amount where your brokerage allows you to, instead of spending $449 on one share on the S&P to see how good you are shorting it, as we did before, you're able, of course, to do what? You're able to buy a fraction of a share. Now, if you're talking about puts and you're trying to short, but you know, if you look at, we talked about this yesterday. If you look at SH, what is that? Well, that's the pro share short of the S&P 500. You can fractionally trade a share of that. Well, you can just do a whole share, $14.74. Things get a little more pricey when you're looking at a share of the S&P. The reason we want you to do that is when you use a little bit of real money after you've paper traded for a while, you really hold yourself honest. You get to see if you know what you're doing. Typically, we say, hey, $100. See if you can make 2%. See how you do. The nice thing about $100 is every dollar is a percent. So you know if you manage to turn $100 into $50, you got problems. If you manage to turn $100 into $102, $104, $108, hey, things are going the right way. Let's jump into these charts. Everything down for the day. Stocks really hammering down. S&P down 1.29% for the day. Of course, remember that 2-day crossover going down. Looking pretty sweet right now, isn't it? We see the price percent oscillator pulling away from the red signal line. Derivative oscillator negative and gaining downward momentum. Red down candle for the week with a tail on the bottom. Look at this 2-day chart. This is where you can actually see what's happening. As we look at this chart, we've got a bit of a lamination there. Let's see. There we go. Okay, what we have, there we go. There we go. I thought that was laminated. We can see where on the weekly chart it crossed over going down. I know where my lamination is. That's on the Qs. But anyway, you can see where we had things cross over. Now, this is the 2-day chart, but we had that weekly continuing to just hang down. I'll just show you so nobody gets confused. That's where the weekly vertical crossover was. And we saw the PPO continue to stay negative. And then finally, the 2-day crossed over going down for us. And what has happened in that interim? Look at that. 3 nice down candles. Those of you who shorted things, I know you're happy. On those practice trades, derivative oscillator gaining downward momentum, price percent oscillator spiking down. You can see sort of the intraday movement went down several days, sideways up a little bit, and then dropped off, hammering down Friday. So that 2-day recross paid nice dividends to you guys on your practice trades. Let's go to the Nasdaq 100. We gave you, everybody who has applied for, and you do, we just put you on the texting service. If you'll follow, well, I can tell you how to do it. You text to the number 33222, one word, charting wealth. You text that, you'll be on our list, and every time we have a weekly vertical crossover, you'll get a text message, as all of the subscribers did last night. It said, look out for a weekly vertical crossover going down on the Qs and on gold. So, And again, we do that on these 4 charts. If you'd like 20 a week, then follow the link in the show notes and become a Patreon supporter. We give you 20, up to 20. It's almost always, I think we've had 1 week where we didn't have 20 at least. I sort through them, try to give you the best ones. So they're up and down. We try to find 10 of each. Yesterday we didn't have 10 of each. We had 4 up and we had 16 down. So what do we see going on the Nasdaq 100? We have a weekly vertical crossover that has occurred. I've already marked it on the chart. 2-day had previously crossed over going down. And what do we see happening? Well, derivative oscillator still positive, but that price percent oscillator closed. Now, what is your inverse fund? Well, you've got PSQ. That is the ProShares single short, and of course, it moves up. It's cheap right now, and it moves up when the Nasdaq 100 goes down. Also, for those of you who are Patreon members, you know you have that 3-part training, Options Made Simple, the Charting Wealth Way. I'm very proud of that. That is an excellent training, if I have to say so myself, but a lot of you have also said that. Again, available to our Patreon members. You can see how PSQ over the last few days on the 2-day chart has been heading up. Now, that's one way to do it. Buy an inverse fund. Now, I encourage you to, again, paper trade that inverse fund and then fractionally trade it. I mean, look at that. You can buy 1 share. You can see how that share reacts because there are much, much higher fees on these inverse funds, sometimes 10 times as high. Those affect the price that the return that you get. Also, the other thing is they tend to be revalued often every day. So it moves up 2%, then that becomes 100%. Then when it moves up again, it just makes for difficult math when things don't go your way. And sometimes even when they do go your way, things that really need to be trending, these charts are made, or these funds are made for shorter term thinking. So you got to practice trade the stuff. You know, none of this is about you jumping in because you've been following us for a couple of weeks doing crazy stuff. We're an education firm. We're not a stock calling service. So I always make that perfectly clear. Now, let's keep moving. We see where the 2-day is. Wait, let me get back to the Qs. We see where the 2-day is. And again, that weekly vertical crossover, things are moving down. How good was that weekly vertical crossover? It was okay. Not perfect, but it was okay. Down in the morning, further down in the afternoon on the intraday movement. When I say it was okay, what am I talking about? It's not just jacking away strongly from that red signal line. And look at this, derivative oscillator still positive. We've seen how these markets continue to bump up, bump up, bump up. I don't feel great about that weekly vertical crossover, but again, it did occur. If you practice traded it, by all means, make sure you fill out your trade worksheet so that you learn the most from it. Those trade worksheets, daily market worksheets and weekly market worksheets are the secret sauce to expediting your training, to really accelerating it, to making sure that you understand what's going on and that you have an almanac that you can look back at to really inculcate those lessons. But you know, you don't believe me, you want to do it on the fly, then, you know, it's your life. It's your money at some point. What do we see going on with the 20-year bonds? TLT, we see the price percent oscillator is flat, down for the day. Overall, the week was up some, but you got that long wick on top where things got knocked down. Price percent oscillator, like we said, is positive but flat. Derivative oscillator positive, continuing to lose momentum. What do we see on the 2-day? Well, it's still down. In fact, it was heading up, and with this latest down move, it's sort of heading down again. Derivative oscillator negative, still losing downward momentum. What did we have happen at the end of the day? Well, we had a half-day crossover going down. Derivative oscillator went negative, so did the price percent oscillator. Way down in the morning, not as much in the afternoon. So as far as bonds, recrossing, having a 2-day recross as we saw, not so fast. Maybe it'll happen, but it didn't happen this week. Okay, let's go to gold. Gold down for the day, 0.1%. 0.16%, but overall, man, gold really let us down. We go back in time, gold hasn't let us down in a long time. Even when we had the latest, two prior crossovers going down, it had a big down week. The next week did us all right. And as far as the up moves go, we had sort of an iffy, again, a down move. I can see one where it crossed and again, didn't do too much for us. But as far as the up moves go, gold has been beautiful. But it really let us down this time. It popped up and then rolled back over, but we can count 1, 2, 3, 4, 5, 6. We can go back all the way to 2018, and every up move rewarded us. So why did we jump into this one? Because all the way back to 2018, all these up, and probably beyond, and all of these up moves, things worked for us. Well, they didn't this time. We've been knocked out of this one, and I'll show you in just a minute why. Well, first off, those of you who take our trainings and you listen to what we teach, and we talk about profit and loss bands and how when that loss band is hit, you pull the trade. You wait for your next opportunity. You set those loss bands before you jump into a trade so that you know when that happens to pull the trade. That is important. And again, this shows you the importance of that. Even though going back in time years, all of those up moves have worked, it's not always. And this is what separates the winners from the losers. It's not always guaranteed. That is why you have to know when to pull it. And it's the losses that kill you. The profits are easy. So we see that we had that occur on the weekly. We see the 2-day, which absolutely positively would have taken you out. That's crossed over now, going down along with the 2-day. We do not have an inverse fund for you to look at. Oh, there are inverse funds on gold. DGZ is one of them. The problem is the bid and the ask is way too far apart. So how do you short gold? You do that with a practice put. And again, great training for our Patreon supporters. I only have a few slots left. All the $100 a month slots are gone. There's a few $30 slots if you want that training. I know I keep pushing it because I love it and I'm proud of it. Okay, that's where we are. Let's look at the half day. We can see where gold has really been sort of hanging around that same mark. Has it reached a bottom? Is it going to turn around and go up? If it does, our first opportunity to jump back into an up move on gold is going to be on a 2-day recross. We'll wait. We'll see what happens. That's where we are on our 4 big charts. Now we're going to go to Bitcoin, down 0.41% down week. We look back at Bitcoin and we can see when things go red, sometimes they go red a while. Now the price percent oscillator still positive and flat, derivative oscillator positive, losing downward momentum. But the 2 days what took us out. And with that 2-day crossover going down, now, you know, again, when you had that weekly vertical crossover, what was your jumping in point? Somewhere around the $43,000 mark. What was your high? Somewhere around the $49,000 mark. And again, I'm using Heikin-Ashi candlesticks, so it's not accurate. You can go out of the Heikin-Ashi candlestick. And where is, I'm trying to remember on the fly. I think you do it. Here you do. You go out of Heikin-Ashi by going just candlestick. Let's do that just to see. Okay. So when we do that and we look, we see the jumping in point 46. Let's see, that would have been around the close. 46,478 to a high. Where was the high? 51.40. Let's see. 49, so around, I guess, 41 to 59, depending. We need to go to the 2-day. We had that. Now, that would have taken us out completely. But again, we had, you had an opportunity there for a few $1,000s. Now, again, your profit and loss bands, putting those in, making sure you're tracking. I'm going to go back and reset. Not hard to, this is what's so great. The reason that I absolutely love TC2000, the paid version of freestockcharts.com, is how great it is. Everything you need is here. And for those of you who are looking for a trading platform, first off, when you subscribe, you can paper trade for free at TC2000. They also have a brokerage, which is even more genius. You can trade right from the screen. So I love it all the way around. We have a discount coupon in your show notes. Save you 25 bucks if you subscribe to TC2000. Also helps us out here at the show. It's where we are on the weekly. That's where we are on the 2-day on Bitcoin. And of course, when you look at the half day, what's that doing? Well, it had hammered down for 2 days and then started moving up and just sort of flattened off. So where are we on Bitcoin? We're not in it right now. We're waiting for a 2-day recross going up. That's it for the day, my friends. We so appreciate all of you being with us. I am going to put how to fill out those daily, weekly, and trade worksheets. Going to put that in at the end of the video. We so appreciate you being with us. For those of you who are, of course, subscribers, do take the training on fractional shares. God bless you, my friends. All the best from the whole team at Charting Wealth World headquarters.